So you are all into real estate project. You're all working in the real estate project. So I hope you come across IFRS 16. Okay, so mostly this IFRS 16 is introduced on 1st January 29, and IFRS 16 is introduced as a single lease accounting, means lessee accounting. Basically, this IFRS is introduced to avoid the any violations against a country specific rules, right? Each country has certain compliance rules that if CPI, consumer price index should not go above the limit which is fixed by any particular country. So each country facing that kind of issues where the compliance is not followed. So IASB, right? IASB is just they form a committee to frame certain rules which is going to useful for lease contract. Okay, so how we can control the lease contract, how we can track the lease contract, how there is going to be a good mutual understanding between lessor and lessee. So that is for that purpose they introduce IFRS 16. So again, this IFRS 16 has contained certain rules. Important is like valuation rule. Okay, in SAP we'll call it as a valuation rule. So what is our agenda? Like we are going to talk about more on ROE assets, lease liabilities, amortizations. Amortization is again, it is nothing but a cash flow. Okay, that is the most important things we are going to talk about in IFRS 16. Hope you know when IFRS is started, what is the purpose of IFRS for each country, and it is not mandatory that if the country which is or the client, okay, which is adopting a lease means like REFX, it is not that they will no implement IFRS 16 because they might have some different tool, right, to follow the IFRS 16, and they will not follow SAP tool. So till in the lease, the contract may be created till the condition level. It is not IFRS. IFRS is nothing but valuation. Whenever I'm talking about the IFRS 16, then I'm always talking about the valuations and valuation parameters. Okay. So here there are two parts. First part is in FI side. What are the things we are going to say? First, asset accounting. I will show you how the integration is flowing, right? So most important for IFRS thing in asset side, the asset settings need to be performed as a prerequisite. If as a prerequisite asset class or account determinations, whatever the required settings is like depreciation keys. If it is not done, then from lease side, it is not possible to create a valuations. Okay, first thing. Second thing, from FI side, there should be the account assignment. Okay, what is account assignment? Again, the cost center, the profit center, if required, function area, that should be defined as a second thing. These are the two parameters which need to be defined from FI side. Then based on that, we will go to lease side and we will follow certain configuration setting. I'll show you today in asset side what are the important things we need to like follow. Okay, and after that I will show you from our RE means real estate. We'll call it as RE in short, right? So in RE side, I will just move. I will show you the configuration settings, what it need to be done, define all the configurations. Okay, just I will take you that configurations and I will show you what are it is defined. Okay, mostly we are going to concentrate on the valuation rule because already valuation rule is very important perspective of IFRS 16. Then what we will do then as a second part, we will create a contract with IFRS 16. Okay, we will just perform the valuation. We will post the valuation and we will do the periodic posting. Periodic posting is nothing but the settlement. Settlement kind of thing is that what are the impact is going to be ROE asset level, lease liability level, interest level, as well as the clearing level, lease clearing level. So this is the process where we are going to cover it with respect to the IFRS 16.
One question over here. Let's say if we are running IFRS, okay, and the client requirement is that they are using two accounting principles.
Correct.
Both accounting principles may have different treatment.
Exactly. Yes.
Yeah. So in that case, how to manage multiple accounting principles? Considering IFRS is also required. So is it via the valuation area?
Yeah, so within the contract, we can define the two accounting principle. One is IFRS and other one is, for example, GAAP or AS 842.
Okay, so is it a normal practice in RE-FX, implementations, or how it is based on your experience?
Yeah, it is a normal practice because every client they want to maintain the books in two different view. One is from IFRS point of view, other one is AS 842. So it's a normal in accounting principle level. In accounting valuation rule level, we can define that, and whenever we are going to create a contract, we can give options of IFRS as well as once we will define the IFRS. Then we can go and select AS 842, means like operating lease or finance lease, then we can define it. That's a normal standard practice.
Okay. If we can also, touch base on that while you're doing in the system, that would be good.
Okay, yeah, fine. Covered IFRS 16, but anyway, I will cover additional things. No worries. Okay, so this asset accounting part or asset accounting configuration settings will be done by FI, whoever is taking care of it. As from REFX side, we are not the responsible owner of the settings, but it's depend upon where we are working, which client you are working, and depend upon the project's methodologies that if we need to take care, then we have to define it. But the foremost important thing with respect to this asset is we have to define a separate asset class. Okay, for example, we want to define asset class differently for lease, right? We have to define it. Mostly here you can see like 1500 lease improvement or land improvement. So basically what we used to do it for lease we used to start asset class from a Z. Okay, inside of year 6000 or 5000 we'll start with the Z. But anyway, this is depend upon the client preferred, so how they want to maintain the asset class. Here you can see a couple of asset class it has been defined, like for lease, lease operating, this 6000 and 6100, you can see lease capital. Same way for low values assets. Okay, and apart from that here, lease improvement. So these are the asset class where we have to define it. So if we are going to define it, what it will happen, it will just depreciate the assets in a based upon the depreciation key of a lease. Okay, so this is for most important thing, we have to define a different asset class for lease.
Difference between this asset class and other asset class, any specific setting to be done over here, or it is just a normal asset class?
It is a normal asset class, just to differentiate in the reporting level. For example,
okay.
in high level,
okay.
Yeah. And second important thing is we have to define a depreciation key separately for lease. So this is two important things. So one is asset class, another one is depreciation key. So you can see like define depreciation from lease, real estate leasing. Okay, this is different. Whenever you're going for an implementation project, in standard it will be there, but you have to like educate the client that for lease accounting there is going to be a different depreciation keys where we have to maintain the assets, because some of the client will not be the impression that we need to define a separate depreciation key, but in the legacy system there is a possibility that they are maintaining the assets same depreciation keys for all assets, where the books values or net book values of assets may be the same, the same in the sense like a depreciation methods, right? That is going to be maintained the same. But yeah, so like from asset part level, asset class, as well as this depreciation key is very important. Okay, this you need to be defined it.
Okay, but question over here, when we say that we have to define a separate depreciation key, so
Yeah.
from REFX perspective, is there any separate setting which is required in that, like anything specific to lease accounting?
No, like specific means like we have separate asset class and we are
Mhm.
going to create a separate assets, right? And in that asset we'll assign the depreciation key. So what will happen whenever, again, this is for report or maybe for analyze purpose. Okay, for this assets, this depreciation key is in maintain. So based on that, they will do some budgeting and all. So budgeting or planning, they will do it. Okay, for this asset, for example, car or building, you take it. We are making a monthly payment. So what is the useful life it is remaining? How much we have to make the payment for the vendor? So that kind of analysis, just they will assigning the depreciation key. As well as if I will take like IFRS point of view, like we have certain parameters, like okay, this no asset value is less than 5,000 US dollars or INR something, or this contract is less than 1 year. So some of the exemptions they will get it from the government. No need to pay some kind of tax, or maybe they will be exempted from certain assets. So that is the reason they are just REFX or lease perspective. They are maintaining the depreciation scheme to differentiate with the normal assets and to differentiate with the lease assets.
Lease asset, okay.
Yeah. Okay, these are the important things. Apart from that, certain important key parameters are there, like no, they will maintain the depreciation area, they will assign the accounting principle, then they will maintain the fiscal year periods. Okay, and they need to take care of all the asset year and activities, and they have to maintain the number range for asset, because in IFRS 16, uh, we will, whenever we are going to assign an asset, okay, then that time if asset class is not defined, or asset number range is not maintained, so that there may be issues. So like once, so what, now I'm coming to no issues. Just we talked about the no configuration settings, like what are the important configuration setting. If this is not defined, okay, when you are going to execute the contract or when you are going to create a contract, what will be the impact? Okay, first thing, when you will create the contract, first you will get that no, in the asset, or maybe the asset number range is not created. Second thing, the asset class is not defined for lease. Third thing, the depreciation key is not assigned with a lease depreciation key. Okay, if these three things will be going to impact it if it is not done properly, as well as mostly when you will do the contract creations, when you are going to execute the valuation. Third thing, what you will get with asset related, that fiscal period or year end is not done properly. So most of the cases we will stuck from REFX or lease side when asset process is not done. So that is the reason every project what they will do, after like implementing all that FI, SDR, all the modules, after some 3 months or 4 months buffer period, they will start the REFX. Okay, so that all the streams maybe streamline it, and they run the process. And at least for one legal entity, they will run all the process, and they will give a green flag to REFX to start the project. So always they will go with no 2 months or 3 months late. Okay, that is one of the key important we have to be considered in real time case whenever we are implementing the project. I hope this asset integration is you understood, and any questions as anyway. So now we are jumping into the configuration settings for IFRS. Okay, so mostly without this IFRS, means any client they want to proceed without IFRS, they can still frame the settings still accountings. Okay, accounting means still they can use a GL accounts, they can use chart of accounts, and they can use like depreciation and all, they can use it. But if any companies is going to implement the balance sheet, the IFRS 16, then they have to proceed it. So there might be a questions from the client that okay, we don't have IFRS, can we implement REFX, okay, without the IFRS? So what is the license procedures? So like license part, I told you, right? Like if it is going to be on premise or it is going to be a cloud, right? For development and quality system, the license is not required. But when we are going to talk about production system, yes, we have to apply for a license apart from the normal package. Like normal package means like S4 HANA package which contain FI, MM, every modules, other modules, right? But for REFX we have to separately apply for a license. But again, this is depend upon the agreement between SAP and the client. Okay, and whoever is implementing, for example, if TCS is implementing for some of oil and gas, like client, so how that TCS has going to make agreement with SAP for license part. But why I'm bringing this point now as a REFX or lease consultant, whenever you are going to interact with a client, there is a questions on the license part, and that is going to be the requirement gathering phase, right? So as you have to be answerable that yes, it is required. Otherwise, after going from phase 1 phase to phase 3, if this is not clarified, then that time there is a possibility that there may be some delay in the project deliverables. Okay, yes, for this IFRS and all, we have to go for a separate license. Now again, if IFRS starting, so first important thing is control settings for each contract type in company code. Before jumping into it, we need to just check one of the important basic setting, that is activates a function here. Okay, so activate function here is where we are defining the system CEO1 that we are going to implement or we are going to follow the contract valuation. So you have to just always check as REFX consultant that the CO0 is been flagged it. Otherwise, if it is not flagged it, then you can create all the configuration settings, but when you are going to create a contract, it will give you the error. Okay, so better you check this as a first settings. This is some of the basic setting you have to take care of it. Then anyway, so make basic settings in company code. This I hope already it is covered. So this is something pretty simple settings. Now the first settings for a configuration is like valuation specific attributes for company codes. Okay, this is the important settings where we are defining or we are just giving what is a company codes and what is a contract type and screen sequence. What is a screen sequence? So most important thing, I told you that assume that we have like 15 company codes. In that 15 company codes, what business has decided that okay, among the 15 company codes, let's we implement 5 company codes for asset accounting or valuation, because there is a possibility that among the 15 company codes, 10 company codes, they are not into the assets, they're morely into the operation level. Okay, operation is that they are morely into the procurement level, just they will buy a product whatever it is required, just they give to the real estate team. Okay, so what will happen, real estate team will maintain it. So most important, so that you have to be it is possible that in a scope that is a 30 company codes, and as a process oriented, we will assign all the 30 company codes to balance sheet valuation. So as a like RE consultant, you should ask them, okay, we have a 30 company codes. What are the scope of that 30 company codes? Did we need to implement all the 30 company codes? Then they will come up with the points that no, we have to implement 10 company codes or 5 company codes. Based upon that, you have to define here. This is about the company codes. If I'm talking about that contract type, right? This is now like defined that CU01. So contract type also we have to consider. Okay, that what are the contract type it is going to be in the scope. So these are like the settings are looking very simple. No, like okay, we have to assign the company codes contract type. But really, when it is going to give you the impact, like when still the configuration settings no issues, like assume that as client is not aware about the lease. Okay, so you will create the contract. Assume that you created the contract for company code 101 for contract type CU01. You executed all that process, means like you perform the valuations and all. Then finally, then client may come, but there is no very rare possibility, because as a real time it happened to me that they finally they come up the like points that hey, this contract type is not in scope, why you executed. So what happened, at least like in a single day, some business are there where they used to post 50 contracts, 100 contracts. Okay, so they posted around like 80 contracts. Okay, in a single day with the contract type. So all that valuation, ROE assets and lease liability, all the values is been got posted. Now finally they come up, no, this is happen after the go live. Okay, after the go live of 1 week. Okay, so there where we need to spend like couple of like weeks to reverse that. But compared to like FI or asset accounting, no, in lease, no, some of the complication is there in the valuation. Some of the values we can't go and directly reverse it. Again, we have to like go to SAP, and we have to implement certain nodes to rectify it. So that is most important things you have to take care. So just company code and contract type, you need to be defined very thoroughly and carefully. Okay, this is the important settings here. And if I'm talking about this RECGOE, so what is this RECGCOE, which define the system that if you are going to provide the screen sequence, then in the contract level, right? Okay, in the REC, and if you are going to select that RECGCOE, then what system will do? System will just pop up here valuations and valuation parameters. Okay, sometimes what will happen? If you're not aware what you have to give here screen sequence, then you post n number of contract, that valuation parameters is not going to pop up. This is very important. Sometime what you will do, no, like you will create a contract, for example 1010. I will show you like y110. Okay, and what happened, you are not assigned this one, then you will create a contract. Then you will see that valuations and valuation parameters and valuation tab will not get pop up. Then there may be a support issues, you will get it from the client. Hey, we try to create the contract, but why the valuation tab is not coming? Okay, when you will go and analyze, you first you have to come and you have to check whenever if that valuation tab is not coming into like in the RECN, then you have to come and you have to analyze that whether this screen sequence is assigned properly. It is not only for asset accounting. Any like tab you have you have to take it. Everywhere there is a dialog, right? Covered on that dialog option. The dialog option is nothing but to control the fields and tabs. It is similar job what our like what field status like from FI side, what field status variant or field status is doing at all, like suppress, optional, hidden, all that job whatever it is doing from FI side, same process here dialog settings is doing in REFX side. That is one like similarity between FI and REFX. Okay, so that is most important thing. Then I'm coming back to the integration type. Okay, so this integration type, we have a two option. One is asset accounting, and another one is direct balance sheet postings. Okay, so there may be a two scenarios. So currently I'm working one of the like client. So where uh, there is a lots of discussion happen between the asset accounting and direct balance sheet posting. So they are using a different tool. Okay, that is there's an Akisa tool. The Akisa tool is a no, it's a famous tool of like SAP. I can say that SAP competitors. Okay, Akisa is there, and other tool NetSuite. Okay, there's two tools. Whenever you are going for implementation, Akisa and NetSuite are the two tools where that is going to be a legacy system for you. Okay, but it is not that each and every case. Mostly, like I can say 50% of legacy system will be in Akisa and NetSuite. So there is a discussion that in Akisa, the asset accounting is not giving much, like process, like what is happening. They are not able to maintain the master data properly. There is not good synchronizations between Akisas and other. So asset accounting, coming to back the topic, asset accounting, direct balance sheet posting. If any business they want to like make an integration with asset accounting, means they have to select it. Okay, if they want to direct balance sheet posting, means they have to select the direct balance sheet posting. Now what is this difference? If business want to integrate asset accounting, then they have to come to RECN. Okay, they have to pop up the asset here. First thing, okay, asset will be pop up here, and you have to execute all the process. Means the depreciation and all will run based upon the depreciation keys of a lease. Okay, if business they want to proceed with direct balance sheet posting, just you have to define in FI side like AO90 all that required GL accounts. Okay, respect to the down payment, respect to the depreciation GL account, respect to the accumulated GL postings, all you have to define it. What will happen? Anyway, you need to like define a separate GL account. Okay, for lease. If assume that if client is okay to go with the first approach, asset accounting, then you have to follow the normal process. Whatever I explained to you in asset accounting level, you have to define it. Okay, and you have to just in RECN you have to map it this asset accounting. But if client is want to go with a second approach, then you have to restrict yourself. Anyway, you will create an asset. Okay, you will create asset class, you will create all that whatever required settings, and you will create AO90 settings. I hope you all understood AO90 settings, right? Already you are from finance side.
Yeah, that is clear. Account determination in asset accounting is clear.
Correct.
Yeah.
Okay, fine. So there, you have to define your GL accounts. Okay, still you have to restrict, but in direct balance sheet posting, the asset you are not going to map in balance sheet parameters. Means the asset options will be disabled there. Why? What is the purpose of that? Because they want to, again, in business, they want to show in the reporting level, like CFO levels or like a CEO level, that okay, these are the contract, but these are the contract where it is linking with asset accounting. Means mostly, like 95% of case they will proceed with the asset accounting, because they will have a plan. They will have a plan of a cash flow, that okay, for a particular department, okay, we have like 5 cars we have got for a lease, or assume that for a building. Okay, just as like every organizations will put up like some locations. Okay, we have like 5 years or 10 years contract. Now how much remaining useful life, how much we need to make a payment to the vendors. So that all planning, it will help in asset accounting level. Apart from that, there is no much difference, like why we are assigning. Again, then there might be no like low value assets and no like high value asset. That all will come into the pictures. Some of the like assets will get like exemptions, like hazardous, or some of them assets will be get more uh, tax level, right? For example, oil and gas industries, they will use hazardous assets, means which may be impact for a public. So that kind of tracking purpose, they will create assets. But yeah, it is going to be a big impact, like a big client where they have like thousands assets, 2,000 assets. Okay, that level really this REFX is going to be more useful. Okay, I hope you understood the approach between the asset accounting and direct balance sheet post accounting.
Yes, so one clarification over here. See, if we are not using asset accounting and if we are going with the direct balance sheet posting, then the GL determination is done via the REFX account determination, right? Or
yeah, good question. Like the account determination, right? We have a REFX account determination is there as well as asset account determination there. Yes, if we are not going with asset accounting, we have to restrict till that AO90 means AO90 settings. Here, like whatever the coming settings, right? Here, like assign asset transactions, valuation object dependent control parameters. Here we are not going to define any asset class. That is one major difference. If you are going with the asset approach, we have to do all the coming settings. If you're not going with asset approach, we are going to just carry on with the direct balance sheet. Then we have to just stop our settings till here, control setting for each contract type in company codes, as well as this valuation relevance and valuation rule. This asset assigned transactions is not going to come into the picture.
Okay, so basically in the accounting mode, when we do the integration with the postings, so the GL accounts would be picked from there. Okay.
Correct. So it will be picked from there, and yeah. So here again we are doing account, like account determination settings right here. So it will be picked from here. We have to define here.
Okay.
Then we are going to talk about the valuation relevance. Yeah. Just can you give like overview about the valuation relevance? Little bit, like before starting from my side.
Actually, when we create the contract, at that time we get an option of valuation drop down. Okay, if it is a valuation relevant, we select that. At that time, valuation parameter tab will be appeared. Otherwise, it will not appear. So we can say for posting any contract related to the IRFC or valuation, we have to give the setting here.
Great. Okay. Thank you. But what is the purpose of that?
So actually, if suppose we we as per IFRS the low value contract is there. Suppose the value is below 5,000. So in that case, here we can select the low value lease. So like in that case, we will not follow the depreciation and all these things. So based on that, we will tick that parameter.
Okay. Great. Yeah. So that is important purpose of valuation relevance. Okay. So again, now it is not mandatory that each and every organizations or companies will follow this. Okay, just give me a second. I'm not able to see the valuation option here. Just a minute.
So last time the same was happening. That option was not coming.
Really? But last time I saw that.
So if you so last time the top the session here only. So not able to that we can that come with that valuation that tab. So after that told us we will check and on Monday we'll cover.
No worries. Okay, no worries. So let's first complete all the configuration, then we will see. Definitely it will come. Okay. Okay. Now coming back to like valuation relevance. So now you all understood what is the valuation relevance. Two important factors. first important is low value lease and no leasing valuations, leasing valuation, short-term lease. What is this lease, low value lease and short-term lease? Low value lease that $5,000 or whatever. It is not only a dollar, okay? Whatever you are representing for the countries, okay? There, what is the limit they set it? Because each countries have certain limit, right? But $5,000, no, is like every currencies will be like converted or compared with the US dollars. But just to convert that $5,000 to INR, and you say INR $5,000, how much it is coming, okay? And that you have to set as a limit for a IFRS. Now, if you are not only having a contract, like if you are going to have a contract with lesser, okay, for a values of $5,000, or you are going to have a contract with a landlord less than 12 months, then you have created the contract, you made a payment, okay? Then that time you can just like showcase this contract details, your lease liability to the government of any particular country, and you can get off some way off on the tax level, okay? So you can just represent your all the details, your balance sheet details or books of accounts details, that hey, we have a less than value of this much, and this is assets, and we have had a contract, I paid to the vendor landlord. So this is, but in some scenarios, what will happen if there is going to be a low value or short term lease, then in the payment schedule itself, you will have a like a agreement with the vendor. Okay, this is a low value. Let's decide that I will pay you this much of amount. Means like I will pay you like $4,000. Okay, or I will pay you like $1,500 every month, and just you will get an exemption from the government. So there is a possibility that the lessee maybe get the exemptions from a government, as well as lessor also can get exemption from the government. Okay, but in short, this valuation relevance will be used by lessee whenever he is using a ROE assets, okay, to get exemptions from the government, okay, basically for low value and short term lease. Okay, this is the most important things. And second thing is like no lease valuations. No lease valuations means that they are not going to like follow the valuation. Again, valuations means like there is no impact for ROE assets and lease liability. But mostly this valuation settings will be used for low value and short term. Okay, and this is also again like in high level, it will give you the report. So mostly right, all the accounting entries, whatever it is happening, not only from accounting side, whatever it is happening in procurements or sales side, all this basically for the report level. Again, if like from a business point of view, if some of the departments they are decided to have a new contract with certain other vendors, okay, they just simply they can't go and they can't have a contract or have a lease, right? Because they need the budget, because every year for lease also there is a budget. From lease itself there is a separate process, okay, that is called forecasting and budget. Basically that will happen in SAC level. Okay, I hope you understood what is SAC. SAC is again a reporting tool, right? Mostly like this low value lease or short term lease and all, we have to interact with the SAC consultant, because there most of the cases the reporting will be prepared and we have to give it. So from the SAC level, the very beautiful report, very beautiful dashboard will be created, okay, where you can see here we have like 15 like contract with a low value lease, and we have like 50 contract with a short term lease. So just in some of the project, whenever we are presenting with the CFO, like with a SAC dashboard, he will feel happy by seeing who is like newly like now migrated to S/4HANA from other legacies. Okay, so this is most important things. The settings are simple. So IFRS or perspective, the settings it's look like very simple, but in the back end there is more functionalities there. Okay, so more functionalities in the level. The reporting perspective it is level. So first you have to understand the no concept, what it is that and where it has been used. Okay. Now we are no like jumping into no like most important part, that is a valuation rule. Okay. Okay. So starting with valuation rule. This valuation rule is again important, where without this valuation rule, the valuation cannot be performed. It is like a GL account master. Okay. How in FI we have a GL master, same way this valuation rule is a like it is hard for REFX. Okay, specific to the valuations. But again, this is one important thing. Other one is a condition type and flow type. In front end, if we are talking about the user perspective. Okay, so user perspective, the condition is most important thing. Okay, so mostly you will get issues with the condition related. And in backend, so whenever you are getting a front-end issues, means in support projects, okay, in condition level or in valuation level, first you have to just analyze this valuation rule, where it went wrong. Okay, then second thing is flow type. So I hope you all know what is the flow type functionalities. Huh? Okay, now let's start. It's also created no like a good settings. Huh? This valuation rule, he created this 842, and IFRS. He used this IFRS. Okay, this is nothing but no like IFRS 16. Okay, now basically like as Devang has no like asked. Okay, there is a scenario that some of the client are using two valuation rule. One is IFRS 16. Other is like maybe the different rule. It is not that only FA is 842. Okay, yes, they will use to differentiate the accountings. Okay, basically IFRS level the accounting entries maybe differ, okay, in ROE asset level or mostly in ROE asset level. And again, this finance lease level and operating lease level, again the accounting entries may be a little bit different. But why client but what is a preference of like a client to go with the like two different valuation rule? Okay, first thing is it's depend upon the countries. If you take all the European regions or you take all US regions, okay, most of them they will use this IFRS. Okay, most of them they will use IFRS. This IFRS is common for all the continents, all the countries. Whether it is going to be US, it is going to Europe, it is going to Asia Pacific, or it is going to be a Middle East. Okay, but if coming back to this finance lease and operating lease, some of the countries they will not use finance lease. Some of the countries they will not operating lease, but some of the countries, most of the Middle East countries, okay, they will go for finance lease and operating lease. That is two important factors where always business they want to go for it. Okay, now we'll talk about what is finance lease. Okay, so what is a finance lease? Means a lease which define that whenever there is going to be like a contract between the landlord and tenant or lessee or landlord, sorry, lessors and lessee. Okay, we'll call it as a landlord or tenant or lessor, lessee. Maybe these two terminologies you can use simultaneously, but both the meanings is going to be the same. Okay, now there is a contract. Assume that there is a building of 5 floors. Okay, assume that TCS is using that 5 floors and they taken for a lease 5 years in finance lease. They are using, means TCS using that building 5 years. After some discussions with the landlord, okay, there is a conclusion that TCS is going to acquire that asset, okay, as a own, as not a lease. So that is a finance lease. Okay, means finance lease where the ownership may be changed. Okay, the ownership may be changed after stipulated contract period. Okay, there is a finance lease. Operating lease opposite of that. You can use assets once the contract is end. Either you renewal the that asset or you terminate the contract. That is the things. Okay, so whenever you are having a contract with the landlord, then there is a provision that there is going to be a finance lease and operating lease. If we will see legally, okay, if you are going, no, if you are raising option that you want to buy that asset, okay, then there is a provisions of legally that, see, I use this asset, no, I'm willing to buy it. But anyway, there is a mutual understanding that it's not that, no, you forcefully you can go and make a legal uh, process or procedure. No, I want to buy it. No, that's not. But in finance lease, you have an option to own the assets. It's not only the buildings, it may be a car. Okay. And no, like real, no, like I'm using a finance lease in my real time. No, like how it is going to be, like car you can use for 3 years, then after that you can change your ownerships. Okay, that is a finance lease. Operating lease is something different. And yeah, so these are the two important settings. And like tax level also it may be different, finance levels and operating lease level. These are the two important parameters. Okay, any questions before I like jump inside that finance lease settings?
Yeah, so one question over here. So
Yeah.
based on your experience, the asset and everything, let's say whether it is finance lease or whether it is operating lease, okay, the value of the asset to be capitalized in the books of the company who's maintaining those assets, okay, whether it is lease out or leasing, whatever it is. So that valuation or the value of that asset, how that is determined, means is there any specific process in REFX or it is just the contract value or how it is based on your experience?
Yeah. So again, Devang, it's a good question. Huh? So like, yes. So how it will be like whenever we are going to evaluate a contract, right? That asset values will also like capitalize based on the contract values. Okay, that's the first point. Second thing, based upon the contract values, then again the depreciation will be calculated. To answer a question, yes, that value will be calculated based upon the contract capitalizations values.
Because let's say if we are getting into a finance lease and
Correct.
after let's say 3 or 5 years or maybe let's say 99 years, whatever it is,
Correct.
we'll be having the ownership of that respective asset.
Correct.
So when we have that ownership of that respective asset, I was just trying to understand, because in our books of accounts or in our asset register, we'll be having a leased asset with some depreciation value. And that
Correct.
would be
Correct.
moved out of the asset register and we'll have a self-owned asset.
Correct.
Maybe with a what value, like net book value or what value I was trying to understand. Or is there any valuation being done at the end of finance lease or fair value?
Okay.
Like,
Yeah, I got your questions. Okay. Now assume that we are like having a contract with the landlord, okay, for 2 years, and we are now like depreciating everything, and we have some net book values. Assume that after 2 years the contract is end, then we are going to take ownership of that asset. Now what will be the impact on our books, how it is going to carry out? Okay, assume that that asset master we will create, right, for 5 years, correct? That is going to be the same, means like that useful life and all, it is going to be the 5 years. But what will happen, only the ownership in the sense like in the contract level, right? So the ownership means like partners, business partner is there. Whenever you will create, you will assign the business partner. Okay. Now, after 2 years, that business partner, it is going to be your name, right? For example, it is like having that asset. So inside of BP, they will create as a lease out. Lease out means sales, right? So in that they will assign your name and all that books of accounts, all that values will be processed. But yes, it is based purely upon the useful lives. So whatever the remaining useful life it is there, they will depreciate the values and finally after doing all that month end postings, everything in within a 2 years, they will close with the names of BP. But your key role is they will just change the business partner. Here they will going to assign your name. So based upon that, all the valuation will happen.
Okay, because see, ownership, if it is, let's say we are having cars, or we have taken cars from some XYZ vendor on lease,
Okay.
let's assume. We are showing in our books of accounts, or let's say, or we are showing in our asset register for the leased asset, okay, leasing asset. Now, after 3 years or 5 years, and let's say the finance lease is over, and now the owner is saying that, okay, you take the car and you give me the money XYZ, whatever it is. So in my books of account, in the asset register, I have the asset under the asset class of leased asset. And now maybe that needs to be moved to, let's say, vehicles. Because now it is my own asset. It's not no more a lease asset.
Correct. Here there is a two case. One is that either you can change your BP. Second case is that you can create a new asset. Means that it's no more going to be the lease asset, right? Yes, good
Yeah.
catch. Good catch, yeah. Because in the back end, we have assigned the lease depreciation key, right? Now it is not going to like a lease asset. So basically you have to then again you have to create all that. It is going to be the normal asset. Then you are going to like create as a normal asset all the settings. So you have to differentiate this asset is not a like a normal lease assets. So the second case means like you have to create all the things as a newly. It's not that you are going to continue with like old books of registers. So there is a two scenario. Either you can in contract level, if suppose any client is having this scenario, you can give him that solutions or suggestion that see we can do in the two perspective. First perspective is always like you shut down your assets. Not shut down, I mean to say that just in REFX you can deactivate these assets. Means for example XYZ asset you have been created. If suppose we are in month end, just you run all the depreciations, you will have net book values. Just you shut down these assets. If you are going to shut down this asset, that asset is not going to get like any postings further. As a first thing. Second thing, go and create a new asset class, new depreciation areas, and have assets. And you run a depreciation separately. This is the two approach you can like suggest to the client.
Okay.
And all the valuation will be happen with this new asset class and new depreciation key, whatever you want to create, and that old assets will be get shut down. There is no more further depreciation shut down.
Okay, thank you.
Yeah. Great, like some like real-time kind of things discussion is happening. Like I expect like is bringing that kind of discussion. I am expect anyway. So like you are now in a starting stage. So I'm not expecting in that level, but anyway. So if any questions, please let me know. Great. So moving to this valuation rule and like screen title and all. So first important thing, like last time we discussed about the accounting principle, right? So what is accounting principle? So what is a ledger and all? So the three important or like some of the important parameters are like valuation rule. Inside that valuation rule we have like accounting principle and ledger. Then again it is there may be a questions maybe if you're going for some like client level, they may be asked, so what are the important parameters it is there inside that like valuation rule, then valuation parameters you have it, then linearizations parameters, then balance sheet capitalization parameters. Just I will explain you what are the things. First important thing is accounting principle. Accounting principle is most important concept in S4 HANA compared to our ECC. Okay, so this is now which given a new kind of roadmap to the S4 HANA. Okay, in asset accounting level, even lease accounting level. So why we are just assigning the accounting principle in lease just again for a reporting purpose. Okay, so basically like there is like always you have to inform to the business that see we are going to implement like REFX or lease, and we want to create a new accounting principle. But generally the accounting principle whatever it is created by FI you can assign here. Now you can see like accounting principle like it has been like used by the various countries. Okay, so anyone know from apart from, can you explain what is accounting principle? Just for like small rap. What is accounting principle? Like if I'm sorry, the silly questions I'm asking, but it is good so understand from you that what you understand from accounting principle and ledger. What is the most important link between the accounting principle ledgers? Just as anyone can define, okay, this is accounting principle, then what is a ledger?
Accounting principles are the rules set by the governing accounting body of a country or a particular state. So that's how they want the books of accounts to be prepared on basis of those accounting principles, so that they have a common judgment criteria for all the businesses operating in that particular area.
Okay. Fine. What is a ledger then? Like
ledger, we use leading ledger, non-leading ledgers. So the accounting will flow how it is reflecting in that accounting principle.
Okay. Any difference? Like, okay, see, we are assigning accounting principle, right? So, like, this is giving a high level of information, like in country specific level. Okay, got it. Like, we are going to assign, like international accounting standard, but in backend, right? Certain framework is there. It is not now we are seeing IAS, okay, and we are going to assign it, and system going to in backend, lots of coding is there, right? IFRS, the how is going to work it. Okay, now what is a ledger? Anyway, we are giving here IAS an accounting principle, but why we have to give a leading ledger or non-leading ledger? Anyway, here we are giving in the country level, right? But what is the purpose of leading and non-leading?
For leading ledger, we use the that respective head office currency. Non-leading ledger will be having a multiple currency.
Okay.
So the reporting should be differentiated, right?
Okay, so if we are going to assign a leading ledger level, right? So in what extent now we will get a report or compared to non-leading ledger? So assume that there is a real-time scenario. It's the same questions asked by a client when I implemented, when I have a discussion with this one. So client asked, okay, so what is this, like accounting principle, and what is the use of this ledger? Then there is a questions. Okay, so I want to assign, like assume that there is a we have like a 5 years contract. Okay, and first 3 years we want to assign this accounting principle, means IAS, and they want to assign leading ledgers, and they are telling that after 3 years from 4th year onwards we want to change the accounting principle to different, means Ireland, and we want to change the ledgers. So that's a question. So just I want to know, I will tell you what is the scenario, why they asked it. Okay, but what is the purpose of assigning leading ledgers and non-leading ledger? If you're going to assign a leading ledger, in what extent where is going to be the impact, and in non-leading ledgers where is going to be the impact?
So basically, we can assign multiple ledgers to our accounting. First is leading ledger, basically our mandatory ledgers that we are used for the any specific to country or region. For non-leading ledger, basically the accounting principles or the accounting approaches which is used by the company, not the country-wise. So first is the country specific, one is the company code or country specific, company specific, and we have option that we can have one more ledger as part of parallel accounting.
Okay. Okay, fine. No worries. No worries. Okay. So let me take it further. Okay. So I will take you example of a TCS. Okay. TCS presence is all over the continents. Okay. So assume that TCS head office is in India. Okay. That is accounting principle. Okay. Accounting principle means IAS or something. Okay. That is accounting principle. We have to define it now. TCS. Leading ledger, like you know that leading ledger, we have one leading ledgers, means that is set. Okay, you have that kind of currencies. Apart from that, you can't. Non-leading ledgers means you can create n number of non-leading ledgers. Okay, so this accounting principle, if no, like TCS, they want to see with respect to the India, they will assign the accounting principle here. Okay, and they will assign leading ledgers. If TCS, they want to see overall, like financial activities, they will assign here INS, but they will assign a non-leading ledgers. Means non-leading ledger means we can create n number of ledgers. Okay, not restricted like, okay, like a leading ledger 0L. It is n number of ledgers we can create, means we can create like 100 countries, we can create 50 countries. Based upon that, we can create n number of currencies. Okay, based upon the n number of currencies, what we can do, we can create a report kind of things. And basically this how it is going to use accounting principle. Again, this accounting principle you are assigning in the asset accounting. Got it? In the book of depreciation. So that is the definitions. Okay, this accounting principle anyway, this is like, like a country specific. But what is the impact? Where is the impact it is coming from? In asset accounting, you are defining the depreciation area. For assume that you have a depreciation area for the depreciation key. Okay, what you are doing there, you are giving a accounting principle. So it is not that there is a questions. Okay, there is issues that what happened in the asset accounting side, accounting principle in the depreciation area. I am taking as example of books of depreciation area. Assume that there the accounting principle I have assigned IAS. Okay, and that has been depreciation area has been assigned to depreciation key. But what happened here? I'm coming and assigning the accounting principle something different. Okay, then there is going to be the different calculation, right? So always there is a contradictions, means there is an alignment that, okay, from asset accounting side for this for this depreciation for this depreciations, accounting principle, right? So I hope you understood the accounting principle. So mostly, there is an alignment between the asset accounting and there is a alignment between the valuation rule. If you are going to assign a different like accounting principle, then the flow will be a differ. Okay, that is most important things you have to take care. Same for ledger also. You can have like accounting principle you can like have, but ledger you can assign only one ledgers. Okay, so like in other way, many is to one. Okay, so accounting principle, like for example, you created the accounting principle here. Uh, I can say like based upon the countries like AEB. Okay, you can go and assign a different leading ledger. Same like Brazil, you can create Brazil accounting principle. You can assign a different ledgers. But yeah, so ledger is going to be the leading ledger is going to be one, non-leading ledger is going to be one. So why I thought to catch up you on this, because I know I was expecting the answer that this accounting principle is integrating with asset accounting. So that is most important things in the high levels. Okay, now moving to valuation parameters. Okay, so what is the valuation parameters again? This valuation parameters were in RECN. Okay, whenever we are creating the contract, just we are getting that options. Okay, that is a valuation parameters. Here now I need to check the contract. Okay, which is related to the valuation. But for information, just I'm sharing you a screen where it is going to pop up here. Valuation parameters. Whenever we will create, it will pop up, right? So that settings is mostly come from here. Okay, valuation type. Okay, here first option, it is always a balance sheet capitalizations. Okay, why means this valuation is used for ROE asset revalues and lease liabilities to track what we have paid to the vendors and what we have made to the vendors and lease liability. So in simple, balance sheet capitalizations means just to see the ROE asset valuations capabilities. Okay, that is important thing. Second thing, what is the linearizations? Okay, when you have to select this linearizations, you assume that there is an asset. Okay, best example for linearization is assume that there is a building that is like 10-year-old building. Okay, that is a 10-year-old building, but you are going to acquire that building. You are going to acquisition of the building, but you know that this is a 10-year-old building, and now within like 5 years or another 3 years, there is going to be decrease in the values, or that is going to be demolish that things. So whenever you are creating a contract, what will happen? The values which you are going to use it, right? That may be a differ. Like you will have agreement with. No, this is little bit confusing, but just this a little bit it will confuse you. But try to know. I will give you in a simple things. Okay, linearizations means the value will go on changing. Okay, it is not going to be the constant. That is the in simple word. That is going to be the linearizations. In simple, I told you. Okay, for example, you are making a payment to the vendor. Always how the payment will be in condition level, always the payment will be like every month the unit price you are going to make 12,000 per month for a stimulated period. Okay, but linearization is what it will happen. Okay, like for example, the contract start date is 01/2024. Okay, and end date is 31/12/2024. Okay, now assume that till like 31/12/2023. Okay, it all went. Okay, there is no such issues. Asset is good building, but what happened? 20 means like 01/01/2024. Some fire accident happened. Okay, assume that 5 floors are there. We have taken 5 floors. Some fire accident has happened. 2 floors got fired. There is no that 2 floors is not going to use it. But anyway, there is a case that whole building can be not in a condition to use it. But anyway, so just assume that only 2 like floors are got damaged, and but remaining floors we can use it. Okay, so initially from this stipulated period, okay, 1/1/2024 to 31/12/2022, we are paying a per month of 12,000, okay, USD, as we are mostly using like terminologies of USD. So just I'm using it, 12,000 USD per month. Okay, now as this building got damaged and you are not using a remaining 2 floors, now there is going to be change in the values. Okay, inside of 12,000 you are going to make 5,000, or assume you are going to make 8,000 USD. Okay, but there is scenario that this payment you have paid monthly, okay, but there is a provision, you can make a payment to the vendor on daily basis also. Okay, there is a provision. You can create a contract daily. You can make a payment on per day, per week, per month, uh, quarterly, half yearly, yearly. There is a provision that you can make a payment to the vendors. Okay, I hope you know that concept or not. I hope you know that. Okay, now you are decided that you will pay 8,000 per month, but there is a possibility that 1 year is remaining, right? This is 31/12/2024. Okay, so again 12 months are there, right? So you are having a agreement with your vendor that for assume that you need to pay balance 12,000. Okay, you need to make a payment of contract value. You assume that contract value is 12,000. Okay, so whenever I want to bring this point here, whenever you are having a contract, right? So I will show you the overview. I hope till you are clear, right? Uh, the participation group, right? So you are with me, right? I'm not boring you. Huh? This is a little bit boring, but bear with me. Huh? Let's try to understand. I know, like in a first go, no, it's somewhat it is boring or something, difficult to understand. But no, going forward, you can. This is what I'm trying to do. Just I'm trying to get a contract which have the valuation posting and which have the cash flow, like values. I want to show you something. This is a report, post valuation for contract. So I hope we taken a 2 class for reporting. What are the important report? I explain you each and everything. Just go and hear the recordings. Okay. So when I talked about this process, right? We are into this balance sheet capital. We are into linearizations. Okay. So whenever assume that we have this contract, right? So assume that this contract is for till where it is till 23. Okay, from starting from 2019 to 23. So assume that last 1 year, like the contract, like contract is it's got no deviate. Means the values is not different. So what will happen? This is now this values, you will post it, right? So we are now into 2024. Okay, now we are into 2024, but this contract is till 23. Assume that we are into 24 and we are into the 8 period. Okay, and these are the balances. So end of the contract period, right? Assume that we are into now 31/12/2024 12th period, and we posted the actual values. Okay, whenever we are going to post the actual values here, whatever the values it is need to be 0. Okay, means we close the books of accounts with the landlord. If there is any value is lying here, then you have to check on that. Okay, otherwise you can't close the books of accounts if any value is laying here. Okay, mostly this right, this is basically for assets. Okay, I explain like I have taken like 1 hour and explain you this what is opening balance, depreciation, closing balance and all, and this is with lease liabilities. This value should be 0. Okay, always closing balance, this closing balance always this should be 0. Otherwise there will be issues in our auditing, and landlord, there is a possibility that landlord will not claim. Okay, but assume that contract is closed. Okay, now like the payment, okay, in offline, the payment, you are going to make a payment for after 3 months. You're going and making a payment, you're clearing it in the sense you will go from F1110, okay, and you make a payment. Okay, so as per F1110 all the payment is clear, but from RE-FX perspective, lease perspective, some of the values here it is lying, you're not cross checked. Okay, so what will happen if suppose vendor is coming and is asking the statement of lease perspective? Okay, suppose you want to see the statement, then some values is there, then there is like possibility that he can go for a dispute. Okay, that is case is occur. He can go for a dispute that the payment has been cleared, but why still in my books of account or their books of accounts the value is lying. So just you should be very clear that as a consultant, we have to check it anyway. This in production system, business need to take care of that. But as a consultant, whenever there is going to be year-end activities, okay, then you have to check any closed or any terminated contract, any underlying asset is exist or not, that as a consultant, or during the data migrations. Okay, so any values is there or not, because mostly it will occur whenever you are going for a data migration process. Okay, that time you have to consider only the active contracts, okay, which has the values. Now we are talked about the linearization, right? I talked about the linearizations about this values. Okay, this may be changed predominantly. Okay, so that is a linearizations. Balance sheet valuations means you can see the valuations will be going to be the constant, not here in condition level. Okay, in condition level I'm talking about here. Okay, this values, and also you can simulate and you can see it. Okay, this values you can see, right? Flow type, due date, condition currency, and net book values. So if it is going to be linearizations, then the values will be changed. Again, it is not that it is not that simple to implement the linearizations. Okay, so for implementing the linearizations, we have to follow certain parameters. We have to implement SAP node. Okay, because that is the fire will not happen eventually, right? There is a possibility that rarely it will happen. So to follow that process, linearization process, better to raise a ticket with SAP and implement SAP node, because if you are going to implement any wrong SAP node, it happened to me. It took 1.5 months to correct that one. Total system got because of implemented that SAP node. What happened? Whatever the contract it has been created, all the values got impacted. Okay, even that existing one, and even now when end user is trying to create a new contract, the values we differ because of implementation of SAP now. Okay, and there was a huge volume of data which got impacted, and 1.5 months it got. Okay, so very careful on the linearization. I hope you understood linearizations. I hope now I explain you the situation and when this amount will get impacted. Okay.